Excellent. All right, everybody. Hello and welcome to today's stream. My name is Yaroslav Burchenko. I'm a market analyst with Olymp Trade, and today you guys are in for a moving average bonanza. Now, for those of you that know me, know that I am a very strict adherer to moving averages. To me, they're levels of support and resistance, which we can see fluctuating as the price moves around. They're also levels of entry points. So right here, when we have a cross of the moving averages, we can see that that's a good level to sell from. And also they give us an idea of the general direction, where we can see if we're looking at a graph really close up like this, we can see that the general direction is down. All the moving averages, we have the 100 right here, the 50 and the 20, all of them are pointed down. And so to us, that's a signal that we're in a bear trend. So there's a lot of really neat information that you can gather from moving averages. And we're going to go through in detail what they are, how to use them. I'm going to show you a way to add extra layers of confirmation to any kind of trade idea that you may have. And actually, you can use moving averages in any market. We have wonderful Alex, one of our market analysts, one of our top market analysts in chat with us today, and he's a commodities expert. And so if you guys have any questions you want to ask him, go ahead and write them out in chat. Also, I want to give a warm welcome to all of our new traders and returning experienced traders. We have Indian Tour, Sunday Kola, Chavada Jayesh, Naresh Chander, Computer Lab, Samed, Anoop. Hey, Anoop, haven't seen you in a long time. Welcome back. So really good to see all of you guys. Welcome to the webinar. Today is May the 17th, and we are starting this webinar. If there's ever an issue with sound or video, guys, please go ahead and write it in chat. I hope that everything is working really well. Hiratik Chudhari, welcome. Chudari, welcome, my friend. So, what is a moving average? Let's go ahead and put on a naked graph and go to an asset that's open. Let's go to a currency. Moving averages work fantastic in currencies as the currencies fluctuate all the time, right? We have the gyration. The main purpose of a currency is to retain a store of value. So currencies, more than any other financial asset, they move in channels, right? They stay flat, they move in channels majority of the time, right? The Forex market is 70% within a flat. And so when you use a moving average, it's actually a really good tool in order to get kind of the best results. So we're going to be looking at the dollar yen. Actually, it may be a bad example as the yen has been weakening significantly. But over the last few weeks, we're within a flat. And so we're going to put on some moving averages. You can click technical analysis right here. And then this is where they are. So SMA, EMA, and WMA, they mean SMA is a simple moving average. And what that is just it adds up the values of the open and close, plus the open and close, plus the open and close, plus the open and close, divided by the period. So if you look here, we have the 10, number 10 right here. That means that this is a 10 period moving average. And what it does is it takes the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, the last 10 values, adds up their open and close, and then divides that value by 10. And that is the value that we get right here. You guys see this 129.67? That is the result of this moving average. And so it does that in a continuous fashion, always taking the last 10 or the last whichever amount that you put on there. And I'm going to give you guys some good recommendations for trading intraday. Like if you guys can see, I have the 1 day time frame. That's very, very large. You can actually drop down to something smaller and trade intraday, where you have a lot more signals and a lot more information to deal with, and of course you have more entry signals, and so more opportunities to make money. You can use moving averages in any one of our platforms. They work fantastic in the stock platform, and I'm talking about the FTT Forex and stock platforms. So here we have, FTT, moving averages work great with indices. Every time an index touches a higher period moving average, like say with a period of 50, right, we have trade opportunities, like selling opportunities if we're within a downtrend. Listen, before we get too far ahead into the different trade signals, I want to go through what the moving averages are, right? So the SMA is the simple moving average I just explained to you. The WMA, the weighted period moving average right here, and I'm going to put them all with the same amount so that we can see how they differ. Here we go. So the green line is our WMA, and what the weighted moving average does is it puts more weight. So it does the same calculation. It calculates the open and close of the candle, adds it to the previous open and close, except the candles that are more closer to the beginning of the graph, to the right side of the graph, excuse me, because we're at the right side of the graph, it gives it more weight. What that means is that this multiplier will be, say, this will have a weight of plus 50. This will have a period of weight of plus 49. And when we get farther to the left side, it'll be less important. So it won't have a multiplier to its calculation. Now, why is that important? Because the values that we have closer to what's happening now are important so that the indicator can be more sensitive, right? If we are at the bottom of this downtrend, right, and we have a green candle forming, we want to know when that downtrend is forming. Now, it's very difficult to see right here, but the green line showed us initially that we were going to sell, right? It was the first one right here when we started the massive bearish trend. It was the first one to tilt down. And right now, when we have this big green candle, it's going to be the first one to tilt up. That's what a weighted moving average does. It's more sensitive to the changes in the market. Now, the exponential moving average, this is the same one with the same calculations. It also, let me go ahead and put it on the graph. It also weighs, gives more weight to the current valuations, but it does it, the decrease between the prices, like I told you, the weighted moving average, it uses just a single standard deviation, right? Not deviation, but it uses a single standard calculation, right? So we have 50, 49, 48, and so on. But the exponential moving average does the same increase and decrease between the periods with an exponential mathematical expectancy. So what that means is that we exponentially give more and more and even more weight to the very first candle, to the candles on the right side of the screen. So what that means is that the exponential moving average is the most sensitive one of them all. But also, as you can see from here, it's also the most flat of them all, because it really, the calculations become significantly larger towards the beginning of the graph. All right. If I did confuse you a little bit, you are absolutely welcome. We have a big help section, and you can check out our help center to get a little bit more information. But just for the purpose of continuing the webinar, the exponential moving average, it calculates differences between the candles with a exponential consistency. So what exponential means is that, say we're calculating the first candle to the left side, starting from candle 50, we're calculating that this candle is one candle, the next candle will be two, right? The next candle will be four times as more important in the calculation, and then the next candle will be 8 times as more important, and then the next candle will be 16 times as important. So that's what exponential value means, and that's how the exponential moving average is calculated. So having said all that, what is better for you to use? Where can we make more money? Which exponential move or which moving average will give you the most amount of money? Well, it depends. There are several ways of using your moving averages to get a lot of profit. And as you can see, even the one way that you can use them is having all of the same moving averages on the graph and just reading the difference between what they are. So if we have the simple moving average and the weighted moving average on our graph, we can see that when they cross, that's actually a sign that there's a deviation of price, that price is changing what it previously was doing. The exponential moving averages has a good use as a level of support and resistance. So you can just keep on the EMA, and I'll teach you which periods to use, which periods are the most profitable. You can use this EMA as a moving level of support and resistance. So start writing these things down, you guys. I'm going to give you a few ideas of how to use your moving averages and what kind of periods you can use. So let's start with intraday trading. We already dropped down to the 1 hour time frame. Let's go ahead and move over to our Forex platform, open up the US dollar, Japanese yen, and I think we will get rid of the exponential moving average, and we will just use a few simple moving averages. I want to show you how powerful this trading tool is just with the simple version, right? You don't need to have any kind of difficult calculations, where the simple version provides you really good entry points. So here we have the US dollar, Japanese yen on the 1 hour time frame, and I recommend just try this out on a demo account using a 15 period moving average. The 15 period moving average, I actually got out a notebook of when I used to back test and study different periods of moving averages. And so I got out some tested material that worked for me 7 years ago. And so I wanted to share this with you guys during today's webinar. So you guys are really lucky. Also, I want to tell you guys to stick around till the end of the webinar. Sometime in the middle of the webinar, I'm going to do a giveaway, and we're going to give out promo codes. I know we haven't done this in a long time. It's not going to be skill-based. It's just going to be luck-based. So if you stick around and are active in chat, you may win some free promo codes. And that's going to really improve your trading and improve your mood, right? It's always good to win stuff. So with the 15-period moving average, I wanted to show you how effective it is when trading the US dollar, Japanese yen. Now, this is something that you guys may want to experiment with yourself. But from my experimentations, I wanted to show you how well the 1 hour time frame works with the 15 period simple moving average for the US dollar, Japanese yen. Now, one more thing I wanted to say is that I'm not the only trader using these moving averages. As you can see, the price action just perfectly right here, all of these levels right here as level of support. It's very likely that an algorithm, a robot that is trading on these Forex markets, is using some form of simple moving average with the period of 15 in order to make buys and sells. If you guys didn't know this, there's a lot of automated trading that goes on, and so moving averages are an easy way of programming support and resistance levels into your trading algorithm. And so that's why I'm sharing this with you guys, is that it is uncanny in the way that it works and how well that it works. One thing that you do have to realize is when we actually have a breakout instead of just using a level of support and resistance. And usually there are a few candles that give you that indication that we are not going to respect that level as a level of support and resistance. We are in fact going to break it. And there's a few really good candles on this screen right here for you guys. So the first one is when we have a sharp breakout like this, and then it comes back down. This kind of indication is a foreshadowing, and you can use it in other strategies, not only a simple moving average strategy, but you can use it to foreshadow that, hey, we had a large breakout, and even though it is now contained even though it is now below this level, we may go back to that level to retest it. That's why we have massive like support and resistance levels after those kind of breakouts. That's when that level becomes in play. Now other traders are looking to get out of their positions at a level like this. They're looking to open in the direction of that trade. So they're going with the main trend because we now had a signal that we're trading and trending. And third of all, we have the indication that now the level of the moving average has been broken. Okay, so those three signals you can right off the bat find when you have a large breakout like that. And so in the next candle, it also gave you an idea to reconcile. This is 2 hours of trading, and you see how the green candle moved past the moving average and solidified above it. That is a clue. You need to pay attention because as you can see, these trade signals, they come in pairs of 2. So you're never going to have just, like one random candle shooting off to the top and then all of a sudden we're reversing back down. The markets take time, right? It takes time to see price action play through and follow through. So it's usually a good idea to pay attention and not jump the gun. And so one of the recommendations I can give you guys is wait for the candle to close before you make a trade. So if you saw that we had a big breakout candle like that, you do not want to be selling, right? You do not want to be looking for this level as a level of support and resistance. This candle, on the other hand, though, take a look at this. It touched that level and then came back down. In my mind, that candle indicates that, hey, maybe in the next hour or two, we may be selling, right? But as we can see here, that's when the trend really picked up. And you'll be using oscillators, like an oscillator like the MACD or CCI that you guys saw on my screen at the start of the webinar. Those will help you to identify kind of that momentum when markets pick up and directions change. That's what you can find here. The next candle I wanted to show you of when you don't want to be using the level as a support and resistance level is when we have a large candle and it solidifies above that level, right? We had a breakout, the breakout held, and then what do, right? That's another good solid signal that you do not want to be selling at this point. So you can see that we're kind of in a downtrend, but then we had a large massive candle that broke out to the top. Well, what does that mean, Yaroslav? What are we supposed to do in that regard? Well, in this case, you sit on your hands. That's right, you don't do anything because the global trend or the hourly trend is bearish. We had a large candle that broke out to the top, and so to me, this is a signal that would indicate that there's bulls in the market, but they come at a very bad time. They're not profitable bulls. They're not bulls that are going to make you and I some money. And so we wait until the market drops down below this level, which only happens in 4 hours after this kind of volatility spike hit the market. And then we have a new low. And so you always want to combine. We have a lot of webinars on price action trading. You always want to combine candlestick analysis and price action trading with your instrument toolkit. What do I mean? You always want to be using your indicators because your indicators are a form of measurement. They're a ruler. They're a scale, right? You would never, I love this metaphor, you would never go to the market and say, give me a bag of apples. Right? That bag of apples is usually always weighted. You would never go buy, you'd never say, hey, give me a handful of salt or give me a handful of spices, right? You would always say, hey, I would like, 5 grams of cumin. I would like 2 grams of pepper spices. So that's what I'm saying, where indicators are a very key tool, and you want to put together a few indicators that you're comfortable with, that you tested, and that have been proven on the demo account to make you money. It's super important to trade on the demo account while you're trying out new strategies and looking to add indicators to your toolkit. So after we find this new low that we're going down even lower, that's the time where we start using the simple moving average as a level of support and resistance. And remember, I told you before that, hey, we had this candle, it broke out to the top, but then came back down. that is an indication that we see there is a big difference though. I wanted to show you this. You see how this candle is large to the top side and this one is small. Like you can measure the volatility. Here it was 130.06 and this was 129.93. So it was only 13 basis points, or not basis points, but 13 points of volatility. Whereas this one is 130.45 and 130.13, right? So we have 22 points of volatility there. Big difference, right? Big difference. 12 and 22, almost twice the size of 13 and 22, almost twice the size of the volatility. So that's what you want to do. You want to make sure that you're trading, you use all the kind of signals that you can get from the market. And so here we're in the downtrend. We made a new low. This high could not reach this level. This high could not break above the 15 SMA. Now, the following candle, me and you are looking for a selling opportunity. So you could have sold somewhere around this candle or this candle and held it for, so if you're using the FTT platform, this is also important. And we had somebody ask in one of our other webinars, what's the best time frame, or excuse me, the duration to trade when you're using a moving average strategy? Well, the time frame is dependent on, or excuse me, the duration is dependent on the time frame that you're using, and you want to use something that's roughly 3 to 5 times of what it is. So if we're trading on the 1 hour graph, you want to be using 3 to 5 hour duration period to trade the asset. Now, why is that? Why are we trading for so long? The longer the duration, the more the chances is that you will make a profitable trade, right? The higher the probability that your trade will be profitable. Let's count it out from here. So if we go 1, 2, 3, that would have been a profitable trade. Anywhere, if you would have opened up anywhere over here, that would have been a profitable trade. Let's go 5 hours. We got 1, 2, 3, 4, 5, maybe even 6, right? Still, there would have been a high probability that you would have made some money. Now, I'm a big proponent of the longer the time period, the better, right? And usually within 5 to 7 hours, you can catch an entire move. You can catch a reversal. You can catch a lot of things, especially if you're trading on a really good entry point. And let's add another moving average. So we went through the duration. If you're trading on FTT, a good duration period is 3 hours. And then the larger you get, that's if you want to trade on a continuation. If you're trading for the longer term, 7 hours, 6 hours, that's a really good good turnover period. So we have a question from Michael Onyango. Can I use 1 hour in FTT with the Ichimoku Cloud? Absolutely, absolutely. The Ichimoku Cloud was actually made for day trading, and you can trade within, within the day all sorts of assets. Let's go ahead and add another period moving average and switch over to the Euro USD currency pair. So I want to add 2 more. This is another strategy that I have back tested in the past. We're going to drop down this simple moving average to 13. We're going to drop this simple moving average to 8. And then we're going to drop this simple moving average to 5, and then just change their colors as well so we don't get confused. Perfect, there we go. So this in and of itself is an indicator. It's kind of like a gator indicator, and it works in a similar fashion. You guys know that the gator, when it like intertwines, you don't want to be trading, and then when it splits open and the mouth, starts chomping down, the mouth widens, the maw, as you would say, then we start to trend, and that's when you want to buy and sell. That's when you want to open up your trade. So here we have 13, 8, and 5 simple period moving averages, and I'm going to change the currency pair to the Euro USD. And that's what I wanted to get across to you guys. See how there's 2 market, actually here you can even see 3 different market situations. So if we look over here all the way to the left, they are kind of intertwined and nothing's going on. That's kind of a flat, so you don't want to be trading that. And then all of a sudden they start first of all, they start pointing up, and then they start getting farther away from each other. So right here, we have a uptrend. This is a small intraday uptrend that if you're watching closely and you're using something simple like 3 simple moving averages, you can have an indicator of when to trade right here, right now, to the upside. Here we have some more confusion, right? They're still kind of crossing. Over here, there's some chop. And so all in all, you can call this kind of a flat, like this area especially, this is a flat. And then we have some volatility spikes, and we have large candles going to the bottom. And that's when the indicator really opens up again and shows us that, hey, we are now in a dedicated downtrend. And so what we have here is another trading opportunity, a selling opportunity. And then back here, we go back into the flat, right? We're back within a flat and not really much trading going on. So you can use these 3 simple moving averages in order to give yourself an idea of good trading conditions or bad trading conditions. Like the Euro USD is actually a very difficult pair to trade. It's the #1 traded asset in the world. It has the biggest turnover, followed closely by E-mini futures of the S&P 500. But the Euro USD is a very, very volatile and highly traded currency pair. And so only here towards the second part of the day, we have a good point to buy. Now, when you're using this strategy, the way that I just taught you to buy and sell when the moving averages diverse from each other or kind of spread apart from each other, you want to make sure you trade when the mood changes. So here we're within a flat, and then here we have a change, and all of them are pointed up. This is where you would want to buy. You would want to buy initially after the change, and not right now when we're in the middle of it, right? We are right in the middle of it. And if you can kind of see the 5 SMA, which is the most sensitive, right? The smaller the moving average, the more sensitive it is to changes in the market. And so what we want to do right here is you want to be careful, right? We have this indication that there's a little bit of a tilt to the bottom. We're not kind of expanding from each other like we want to see. So this is kind of a safety measure. You don't want to be entering in this trade right now. Okay. So let's move on to a higher time frame. I personally recommend if you want to be using if you want to have a lot of signals, if you want to have several layers of confirmation to your trading, I would recommend using a split screen. So here I have the Euro USD on the 1 hour time frame, and we have the smaller period moving averages. Here we have the Euro USD on the daily time frame, and we're going to be using larger period moving averages. Now, the classical setup that I run with you guys is a 20 period moving average, and I'll teach you guys how to do it, how to set it up really, really slick, really savvy, and you'll be able to have several trade signals from the 20 period moving average within the Bollinger Bands indicator. But let's go through that. Let's go through the initial moving averages that we want to have on our graph. So here we have the 20, the 50, and the 100. I like to color my 100 dark yellow or light yellow because it is it's a golden boy. In several assets, it really shows you good top-notch support and resistance levels. So here we have a multiple screen setup. One of Alexander Elder is one of the legendary traders of our time, and he really recommended this trade setup so that you can have an idea of what's going on in the long term while you're trading in the short term, right? It's very helpful to understand that. So even though that we're going up here in the short term, we always keep in mind that the downtrend is really strong. And as we can see, the downtrend is actually becoming even stronger. You can see the large period moving averages pulling away from each other. And just like I showed you with the 15 period moving average, we also consider these larger period moving averages on the daily graph. As you can see, the 20 SMA has been used previously as a level of resistance. And so the fact that we're coming up to this level right now, and actually we even touched a Fibonacci level right here. Go ahead and make this a little bit smaller. So we can see that this Fibonacci retracement, I traced it off of the last correction. So here we had the end of the correction, and then we moved back down, and then another correction started. That's an impulse, right? So I captured that impulse with the Fibonacci retracement level, and it gives me levels that are just amazing. Like, have a look at this. If we drop back down to the 1 hour time frame, it gives us an incredible level that I have worked with over the past month and a half. Excuse me, last half a month. And so we're now coming up to another level, another Fibonacci retracement level, and price halted, price stopped. And so from here, it is very likely that we're going to show some consolidation. And then also if we poke up a little higher into this level here, somewhere around this area, we're going to see a resistance level being touched we have a strong level of resistance that we're going to touch and possibly correct down from there. So I think this is a good time to give out promo codes, guys. I'm going to go as random as I can be. So first winner of today is Bala Lakshmi. So Bala Lakshmi, congratulations. You are the winner of the first promo code that we have. Your chat was the first one that I saw, and I'm thinking, hey, right now is a good idea to raffle off the promo code. Usually we would use Sheep Chat, but unfortunately I don't have the program with me right now. So our first winner is Bala Lakshmi. Congratulations. What I want to ask you for, my friend, is go ahead and write your account number so that we can send you the promo code. Go ahead and write it in chat right now. It's totally safe to do so. We will go ahead and give you the promo code after the webinar. All right. Congratulations, Bala Lakshmi. Absolutely. So in order to win the second promo code, I'm going to ask a question right now in chat. So here's the question, guys. What is the best trade duration when you're trading on the 1 hour time frame on the FTT platform? What is the best trade duration for trading on a 1 hour time frame on the FTT platform? While you guys are answering that, I'm going to go ahead and look for another asset and maybe open up some trades together with you. Let's go ahead and check out what's going on in the cryptocurrency sphere. There's a lot of chaos, a lot of NFTs being closed down, and UST got closed down, and there's some stress and pressure from USDT, but I can see the support levels holding. Bitcoin support is holding. Okay, good stuff. Anoop Mishra, congratulations, Anoop. So the correct answer is 3 to 5 hours, but Anoop Mishra answered correctly that 3 hours is the golden ratio. You want to go times 2 to 5 of your time frame. And so Anoop, go ahead and write your account number as well. So Bala, I'm waiting for your account number, and Anoop. Alex, if you can, please help me to see their account numbers. If I miss it in chat, go ahead and copy it for me. Thank you, my friend. Yes, so the correct answer is 3 to 5 hours. So we had Anoop correctly answering as well. But okay, Naresh Chander, you are absolutely correct. Michael Oyango, absolutely correct. Olymp Trade win, absolutely correct. Luke Youngman, 5 hours also would have worked. Mustafa Nouri, that's right, my friend. Yeah, times 3 times 5. You're absolutely correct. Hello and welcome. Okay, don't forget to type your account ID, guys. And then we're going to have one more, and we will go through that today. I want to teach you one more trick. So let's go ahead and go to the daily graph. just for my administrative duties and my analytical articles that I write, I have, like I showed you guys, a 20, a 50, and a 100 period moving average. You can also use you can also use a 200 period moving average. There you go. My brain is thinking and my hands are typing. So you can use the 20, 50, 100, and 200 period moving averages on any time frame, and they'll give you a broad spectrum understanding of the market dynamics. Now, what I wanted to teach you guys is that instead of using the 20 SMA right here, what you can actually do is slap on a Bollinger Bands indicator. So if you can see this, the Bollinger Bands, I'm going to go ahead and change this color to teal. And you can see that it goes right over the 20 SMA. You see this 20 right here, or right here? That means that the Bollinger Bands indicator middle line is that exact 20 period moving average. And this bottom number means that we are 2 standard deviations away from the 20 period moving average. So you can actually go ahead and click off and get rid of that SMA, and that'll save you a little bit of space up on top over here. Plus, it'll give you the benefit of the Bollinger Bands indicator. We're not going to get too deep into it today because it's one of those, it requires the whole entire lesson in and of itself. It's a very effective indicator, but you can actually change the color of the Bollinger Bands indicator to make it look more appealing to your eye. And that's the bottom here, standard deviation, and changing the color right there. So this is a little trick that I use in my trading every day. I have these period moving averages. And what they show me is they show me fluid levels of support and resistance. And they show me where the moving averages cross. And they also show me that, hey, we have been touching the bottom Bollinger Bands indicator for some time, and now we're likely to see the price of Bitcoin move up to somewhere around the middle area, or somewhere around here to $33,000, $34,000. Let's go ahead and have a look at silver. So we have goodness asking for some silver. Yeah, guys, go ahead, please, to our lucky winners, please go ahead and write your account IDs. So because I want to open up something really small, I'm going to go ahead and change my moving averages to something really small. We're going to keep this at 13. We're going to change this back down to 8. And this back down to 5. Hey guys, by the way, one more thing I wanted to say in terms of what period of moving averages you can use. You can use the periods that are within a month, right? We have 5 working days within a week. That's why I have the 5 period simple moving average. I also know of a strategy that uses the 5 and 22, right? There's 22 business days within a month. So you can use a 5 and 22 period moving average. Another thing you can do is use the fib retracement levels as the period moving averages. So what I mean by that is you can use a 16 period moving average, a 38 period moving average, and 76 period moving average. This is also something that I've seen some traders do. Now, I can't tell you how effective it is. I personally, I went through my notes and I didn't really dive deep into fib levels at that time when I was researching moving averages. But I know that that traders have used this before in the past, and the Fibonacci levels, they really have something special in them. Like as you saw in the previous example of the Euro USD, the Fibonacci levels really work in the markets. The markets are a living, breathing organism of human emotion, right? There is algorithm, but those algorithms were programmed by people. And so there is still that element of emotionality in the markets. And so the Fibonacci retracement is actually really a mathematical wonder, but I've seen it do amazing, incredible things in the market. So one of you guys, I want to give you guys a homework assignment. If you could test out the Fibonacci retracements as moving averages, so 16, 23, 38, 61, 76, 50 as well. 50 is a fib level. So if you can test those out, and the next time we have a webinar, which I think is on the 24th, So that's next week, next Tuesday. If you guys can come back next Tuesday to my webinar and report how that how that worked for you, I will give you guys additional sweet gifts. I don't know what they are yet, but it could either be knowledge, it could be promo codes, or it could just be the satisfaction that you did homework and now you're a little bit smarter, you're a little bit better. So let's go ahead and show you where the account ID is. I see that we're having an issue. Just go ahead and open up your account right here. Click on your user profile and then just copy the ID right here. That's all you need to do. Just click on it and then send that ID into chat like so. So that's what you guys need to do so that we can give you your promo codes. Now, how will we do the last promo code? Last promo code. Who can tell me what the difference is between the weighted period moving average? Oh, thank you, Bala. Good job. We got your account. The weighted period moving average. So this is to get a promo code, guys. What is the difference between the weighted moving average and the simple moving average? What is the difference between those two? I'll leave it at that. Let's see if I can find some entry points, guys, in the short term. So let's get rid of this. So for silver, I really don't see anything. Oh, one last thing. So while you're answering that, I don't want to distract you too much, but also crosses of the moving averages, right? They're called the golden cross for a reason. When we have a quicker period moving average right here, the 5, crossing over a shorter period moving average like here, the 8, that's also a good entry point. So right here, what we're going to do is I'm going to drop down to 30 with a 50 multiplier and then buy. And I'm going to set my take profit to the top of the Bollinger Bands indicator. Oh, that's actually going to keep me at 0. Okay, yeah, we're on a 5-minute graph. I see. And we're trading silver. Okay, silver has some upward dynamics. The last place that we touched was the up period moving average. So maybe somewhere around this level where a lot of business took place, a lot of trades exchanged levels, so something like that. Now the silver has a very small multiplier, so what you need to do is plan your trades for the long term. You want to be opening up trades that you'll keep on for a long time. So I think I'll go up to the higher time frame, the daily, and then see if I can maybe place my take profit just a little higher somewhere. It's very possible that it'll reach this top level here. So 15 is 50% of my trade. I think that's a great result for any trade. Although FTT does give you like up to 90% or 80, 85, 82%. Getting 50% is not bad as well, especially when you control the time as you do in a Forex trade. All right, perfect. Congratulations. Now you got it. SMA close price, WMA open price. Nope. Mustafa Nuri. Nope, that's not correct. SMA calculates the average price over a specific period, while the WMA gives a more weight to current data. Absolutely. Thomas Aldo is the winner. Congratulations, Thomas Aldo. Good job, my friend. That is a very precise and correct answer. That's right. The weighted period moving averages gives more weight and more significance, more meaning to periods that are closer to the right side. So it's more sensitive, right? It follows the trend more closely. That's right. That's right. Yeah, Thomas Aldo. So on my chat, he was the first winner. So Thomas, if you could send your account ID, you will be our third winner. You're absolutely correct. And hey, maybe next week, like I said, that we will have other ways of winning. And so what you guys can do is write your favorite Indian movies. Like Hindu movies are the best. Shah Rukh Khan is one of my favorite actors. He's got, you know, some of those old school movies that were made in the 90s and the early 200s. They're so beautiful, right? They portray love and honor in such a good way. They're really heartwarming and they're good to watch. So write some of your favorite actors or movies in the Bollywood scene, and then I will choose from your comments tomorrow. Or excuse me, not tomorrow, next week, and we'll see, maybe you guys can win some prizes. So again, that's not in chat, that is in that is in the comment section after the webinar is finished. And you guys, you know what? That's it. We're coming to the end of the webinar. It's already been 46 minutes. I want to remind you guys that we do have social media pages. We're really active. We have Facebook, we have Instagram, and of course we have the YouTube page. You should definitely be subscribed to that because we have a lot of media, a lot of shorts, economic news events coming out. It's something that'll give you a lot of worth to your time. And also make sure to subscribe to the YouTube channel if you haven't done so. If you leave me a like and a thumbs up, I'd really appreciate it. It makes my job of teaching you a lot more rewarding. So if you do leave a like, I really appreciate you, and good karma and good luck to you as well. And make sure to subscribe to the channel so that you can on your cell phone get a little recommendation of when a new video comes out, when we have some sort of event coming out, so that you don't miss out something like that. All right, that's it for today, you guys. Thank you so much for coming. Congratulations to our lucky winners. Anoop, I know we have your ID. We also have the ID of Bala. So now we're just waiting for Thomas. Mr. Thomas Aldo, if you could send your account ID into chat, that would be fantastic. And so next week, guys, I wanted to give you an idea of what we're doing next week so that you can kind of track. We have how to find your trade idea. Like, when you wake up in the morning and you sit in front of the screen and you're like, what in the world is going on? What am I supposed to trade? I'm going to teach you how to quickly and easily find trade ideas. It's just browsing a few websites, looking at a few indices, and getting an understanding of what's going on in the world. Or it could be something as simple as looking at your indicators, right? Sometimes, especially in the currency scene where nothing is going on, no economic news comes out, and technical analysis is king, all right? So that's the plan for next week. That's it, you guys, for today. I have to finish up the webinar. Thank you all so much for coming today. Together, my name is Yaroslav Burchenko, and together with Olymp Trade, we wish you guys good luck trading out there, and see you all next week. Peace!